Good morning, good afternoon, good evening, everybody. It's a pleasure to be with you today. I'm going to ask Hethel Poppert from HSBC and Ralph to join me on screen. I can see Hethel, but I can't quite see Ralph yet.
Hi, everyone.
Hi, Hethel. And yes, we have Ralph back with us as well. Thank you both for joining this session, talking about open banking, PSD 1, 2, and maybe PSD 3. Just by way of introduction, everybody, I'm Lilix Devlukia. I am formerly a regulator with the Financial Conduct Authority. I was also head of regulatory at the OBIE, the Open Banking Implementation Entity, and I basically lived and breathed PSD2 for the whole time it was during negotiation. I'd like to introduce Ralph Bragg. Some of you will already have been on the session where Ralph presented earlier, but Ralph was the Ecosystem Trust Framework Architect at the OBIE and is a digital identity specialist. And I'd like to introduce Hethel Poppert. Hethel is the Open Banking Director of HSBC and the Global Product Lead for all Open API development in core banking products, and the HSBC representative on the Open Banking Implementation Entity Steering Group, and that was a mouthful. Thanks both for joining today and for sharing your thoughts with us. I'm going to dive right in and ask the questions, and it'd be great if we can have a conversation, and if anybody would like to post anything in the chat, please do that as well. So the big ticket question, in your opinion, what is the current state of open banking in the UK and the EU today? And Hethel, let's start with your views on this, please.
So I think we made a really good start. We're 4 years in, and we now have around about 10% of consumers using open banking services in the UK, and about 20% of SMEs. In Europe, the picture varies dramatically. So in some markets, Scandinavian, Netherlands, Germany, we're seeing very good traction and quite similar levels of adoption. In other markets, it's been less successful. And there's still teething bugs that are being worked through between the various participants in the market. So I think we're making good progress. I think if you look for a local Asia parallel, HSBC is also live in Singapore, and we're seeing about the same growth curve. 2 years in, Singapore's hit about 2% of consumers now using the service. UK is about the same point.
Thank you, Hethel. Ralph?
Yeah, I'd echo Hethel's points. I'll go a little bit further. When they say it's quite successful in the UK, HSBC being one of the CMA9 was regulated to provide and mandated to provide those APIs. But if you actually look at wider adoption across the UK, there's still a long way to go. Most of the value propositions you see from TPPs do only include the banks that have been mandated. That does cover 90-something% of the market, but there is still a long tail of banks that aren't being served by those TPPs because they don't have the same consistent API implementation. And across Europe, as Hethel has said, it's quite a fragmented state of affairs. There's lots of different standards, there's lots of different standards bodies, and even amongst those standards bodies, there's no real force or compulsion to drive through to genuine interoperability. So you have seen the rise of a huge number of intermediaries that do take a slice of that pie every time that you try and engage with those wide or a larger number of banks. So hopefully with PSD3 we can fix some of those problems and drive towards greater interoperability.
Thank you. So it's got off to a good start, but there's a long tail and it could be better. And so that would bring me to my next question. Bearing in mind that PSD3 is several years away, this is a piece of legislation that took several years to negotiate originally with PSD1, then PSD2, and PSD3 has just started its journey. So both of you have got real practical experience within this ecosystem. So for the benefit of our audience, what do you think has worked well and what, with the benefit of hindsight, could have been improved? And Ralph, let's come to you first.
Well, in the UK, we should have started with a whole of market approach. The original trust framework design was really geared around PSD2 only. It wasn't really looking at the what was needed to drive the UK towards a trust framework for other sectors and other markets. There are some limitations within the current I suppose tech stack that underpins the UK market. The UK was lucky enough to have a strong, very strong guidance that was trying to drive through some very, very clear market outcomes. So what's worked well is eventually getting to the point of having decent conformance and certification processes for banks. What doesn't work particularly well is there's still no requirement for the same, let's call it social contract for relying parties to go through that same conformance and certification processes. A lot of the obligation is still being borne by the banks, and really that should be more evenly, does need to be more evenly shared across, TPPs. All participants have a duty to make sure that their services aren't going to cause problems or issues for, other participants, including new entrants to the market. So I'd like to see conformance continue to improve. I'd like to see increased coverage of testing, driving towards greater security, greater interoperability, and to see that mandated and rolled out across both sides of the open banking equation.
Well, thanks, Ralph. That's quite a long wish list there. Hedl, please.
So I think the thing that's with hindsight we now know hasn't worked with open banking in the UK and Europe is the economic model. So at the moment, the framework is that third parties get to access the APIs provided by major banks for free, and the risk profile on payments particularly is skewed heavily towards the banks picking up the liability for payments instructed, with the TPP is only really accountable for one type of risk, misdirection. And when you step back and think about it, that doesn't make sense. There aren't any other value chains one can think of in industry where wholesalers are required to provide something for free to retailers, particularly if that thing costs money, which of course any technology service does. And so what that's done is it's created these incentives to do the minimum. The reason why in many markets, and from the tail, as Ralph said, in UK, the institutions haven't provided good APIs is not because they don't want to, it's because it's quite expensive to do so, and there's no financial incentive to put that in place. There's nothing except regulation telling them they should. And that regulation shouldn't be the reason you do things. You should do things for your customers, and regulation should just make sure you do it in a good way. So I think that's a big lesson for us, is we have to think about how do you create a fair value distribution so that all actors have the incentive to do things well, so that customers get a high quality outcome at the end of it. And alongside doing it well, we also need to embed customer protection. So each actor we need to understand what are the things they can control relating to information security and fraud, and how do we make sure they then have accountability for those things. Think about the card structure. You have a merchant acquirer who takes the risk on the merchant. You have a card issuer who takes the risk on the consumer. So the merchant and the consumer can interact with each other without taking risk, because there's somebody acting for each of them. We don't yet have that in the open banking payments ecosystem, and we need to work towards a similar framework. It doesn't have to be the same. There's lots of things with cards we wouldn't recreate if we starting again, but we do need to have that mindset. So for me, I think open banking has been led initially too much by a vision driven by the technology, and not enough by a vision of market outcomes and how we can create sustainable customer benefit. And I think industry now needs to step up and engage with government and regulators in a more proactive way to help them see what's needed to get you to that path. And if I look at some other markets around the world, we've seen in Brazil a very effective open banking implementation last year, which was much more a partnership between industry and government. So the total cost of delivery was far lower, and it seems to have got off to a good start with levels of usage already starting to show. Similarly, Singapore was a very good implementation. They had a lot of assets like digital identity to build on, which many markets don't, but that's worked very well. We're seeing similarly in Hong Kong, a very effective partnership between regulator and the 28 banks in the market to try and get something done together. I think that collaborative approach is going to lead to much better outcomes than a sort of traditional regulatory model, which is the way UK and Europe have been to date, and indeed Australia, where regulators define, here's what you need to do, the industry goes off and does it. It needs to be much more iterative and working together.
Thank you. So some really excellent points that you've both brought out, the high level policy issues that need to be addressed. And I think, Hetal, you hit upon the big ticket question is, how is the ecosystem made commercially viable? And that should be sort of front and center of all jurisdictions who are looking at their open banking, open finance, open data frameworks. Consumer protection, obviously key. That's also, I think, going to drive consumer adoption. And Ralph, some really key points on how you have a well-functioning ecosystem, taking into account the technology. We do have this situation within the UK and Europe where we have two methods of access. So I'm just going to ask you, how do you feel that that continues to work, and should it continue to work, or should we go with what is now proposed in PSD3, which is in effect not only an API first model, but a single API model? And Ralph, I'll come to you for that one first.
Yeah, it's a real interesting one. So, as a security specialist, I think to a large degree, phishing resistant credentials are just going to make that, that whole conversation moot. I mean, I'm never going to advocate for banks to be able to be required to support serializable credentials, i.e. screen scraping, or the legacy method of access. And increasingly, we're seeing banks, across the world that are forward leaning and desperate to control and cut out man in the middle, or just reduce their overall fraud exposure, especially as open banking payments start kicking in. They're not going to, I can't see a model where screen scraping continues to work. And I don't think you have really, unless regulators are going to regulate and tell banks you have to maintain an insecure mechanism of securing customer, authentication by continuing to use serializable credentials. I think the industry will answer this for you, because that's just the general trend of the industry, is to remove serializable credentials in favor of, FIDO and other standards where biometrics can be brought into play to reduce the ability, the actual technical ability to perform screen scraping. So that's fine from an API point of view. A single API, I always think is going to be challenging. I think it's a great idea to go, and as I said in my presentation, to standardize on a common, preferably globally interoperable security and authorization framework. But local functional APIs are always going to need to be created, because not every single open banking jurisdiction, or even just, let's call it OpenX program, what cares about banking. They might want to be doing insurance, might be doing finance, but even within banking, there's local market specifics, and there always is. There's no need to have a massively bloated, message filled with information that may not necessarily be, populated or even relevant if you think of some of the older standards. So no, I'm not a big believer in necessarily having one ultimate Uber API, but I do believe in simplifying and standardizing where it's appropriate.
Thank you. Hetal.
Yeah, I mean, I agree with what Ralph said. I think there's a direction of travel that screen scraping based access is slowly being demised in the market. I think there's a complexity that industry has to work through, which is, for example, there are some firms that have small runoff books in which they may not be looking to invest in new API platforms because it's legacy technology. If you insist that everything must go to API, then you may be forcing firms to close certain books or certain platforms because it's more economic than actually continuing to run them off. That's not necessarily the best thing for the customer. And so I think you do need to have a little bit of discretion around the edges where industry and regulators can agree to reasonable exceptions. But in general, as a firm, HSBC absolutely supports APIs as a better method of access, both in terms of customer experience and outcomes, but also in terms of risk mitigation and legacy screen scraping technologies. And I also agree with Ralph's point completely that there are certain parts of this technical standard that should be conformant and consistent, ideally globally. What I would love to see is when we have an exposure in a market, we're able to uplift our standard globally. We operate in many markets, as you know, so that our customers are safe in all of those markets. That seems to me to be the right way to treat security. It also creates a lower cost way of delivering, because if we have a supply chain which can support us in multiple jurisdictions, then it's more efficient than having custom builds in each market. But I do think the actual data specification and the data payload is inevitably going to vary by market, and trying to standardize it is going to create more complexity than perhaps it's worth. Perhaps a common design and localization around certain features like ACH payments would be a more practical way to go.
Thank you. So I think sort of the takeaway from both of you there is that API first is the better outcome. It has longer term benefits, but for anybody looking to implement this type of ecosystem, think about proportionality, maybe one or two exceptions where API first may not be the right outcome. And also bear in mind the consumer protection implications. I think that was really useful. Thank you very much. So we have been focusing on the UK and the EU, and obviously in these jurisdictions, we started on a trajectory that has a grounding in open banking, is very likely to move to open finance, and yet we're not really having much of a discussion around the wider ecosystem and open data. Obviously, other jurisdictions, in particular Australia, have started with their consumer data right and have an end goal in mind. In your view, and Hedda, I'll come to you first with this, how do you see the evolution in the UK and EU from open data to open finance? Sorry, from open finance to open data even. And what do you think is sort of the key consideration that's going to aim for a well-functioning ecosystem?
Yeah, I think as is so often the case in life, there's a second mover advantage. And I think Australia, certainly from this lens, has demonstrated it. A horizontal view, which says, what are the data access frameworks we wish to apply to our society, is a better way of doing things than a series of verticals within each society, but then you can't join up between them. Ultimately, we're already seeing open finance to really work in UK or Europe or other markets needs to have access to more data sets than just the financial institutions make available. If you think about an SME customer, what really matters to them is, of course, their banking data and their accounting data, and then their tax data. If you can merge those three data sets together, then you can really simplify their lives. So that requires public sector to be engaged. So you do need a horizontal framework which cuts across all of those and then starts to drive towards commonality of standards, because Ralph's point earlier was exactly right, that it would be futile to have one security profile for banking, another for accounting platforms, and another for public sector data. It'd make it very expensive to actually deploy services that help your SME businesses prioritize their day jobs and spend less time doing admin, which is what we want. So the discussion in all the markets that we're talking to is moving toward that horizontal view. It's a very big project. I think Australia's shown us a route through, which seems to be working for them. And I know other jurisdictions are looking at it very, very carefully. I think the second point to bear in mind for all of us is, because we work in finance, we think that's what matters. But if we look around us right now, what matters is actually less about finance, perhaps more about energy. And these things change. Events move societies, and that's normal. So right now, the focus on open energy seems to be a much bigger priority for many governments and consumer advocates than focus on open insurance or open asset management. That doesn't mean those other things shouldn't be done, but I think it's about prioritization.
Thank you. Ralph, your thoughts, please.
No, completely agree with Ethel. I'll go one step further. In addition to having a common security framework to make it easier to actually talk, the other part that's required across all of these layers is a common identity and authorization framework, because it's great that you talk the same language, but if you can't prove that you are actually authorized by whatever regulator is telling you that you can engage and interact in the energy market, as somebody else is telling you can engage and act in the finance market, then you've still got the same problem. You might have solved, how you make a phone call, but then proving carrying on that initial conversation to prove who you are becomes the next challenge. And that was one of the challenges that, or one of the design flaws that I'll hold my hand up I didn't natively cater for when I built or designed the UK open banking directory. It wasn't designed natively to be multi-sector, multi-agnostic. There's been changes made there since. Brazil has got has a capability delivered for open banking, but when they went to open finance, they chose to deliver a second directory. So even though they have two initiatives and they're broadly interoperable, they have the same common security standards, they don't have the same authorization and identity frameworks. Now, whilst they'll still work together, it's not 100% optimized. So whenever organizers or countries are looking at accreditation, it does, to Heddle's point, requires a large degree of involvement with government. And I mean that holistically, because quite often there's different government departments that are responsible for different accreditation, different authorization, different mechanisms of, and if you can pull that together to provide a holistic authorization framework, then fantastic. But as the CDR is doing, but that is a really, really big challenge for a lot of, for a lot of governments. But it's a phenomenal enabler if it can be done.
Thank you. So we are nearing the end of our time. So just one final question to each of you. If looking across the globe, we've got obviously different jurisdictions at different stages of open banking, open finance, open data. If you were bringing something back to the UK and the EU to say, actually, we've had best practice, but we now need to learn from what other jurisdictions are doing, what would be your one or two asks of the regulators in the UK, the EU, or even of industry, as to this is what we need to take from X jurisdiction to make our ecosystem better for the end user, for the ecosystem participants? So Ralph, I'll come to you first on that one.
Yeah, simplification. In each market that we've worked in, we've been able to make the standards simpler and also increase security. And that's been, again, with some of the, the active contribution from the OpenID Foundation, security frameworks and profiles when it comes to creating more and more standardized rules and simpler secure standards for engaging in these different ecosystems. The UK was great, but it went first. So if you're asking what we bring back to the UK, is we now bring back 6 years worth of learnings and refinements back to the UK to say, hey, it was great, fantastic, everyone's used your base and that was your greatest contribution to the world. Now it's time for you guys to now, learn from what the rest of the world has learned from you, to then, do V2. The problem with that is that these migration programs or, an uplift program can be quite expensive. It's just, these are foundational standards, they're foundational processes. And when they go in, they tend to be, pretty hard, pretty hard to coordinate and shift. I would always say to any new market that's going on is to look at all the markets that's gone before and try and look at the last one that's gone before and look at what incremental benefits that they took from the one that's gone before. There is always elements to improve. Some markets are quite willing to quickly improve and continue to iterate. Brazil in particular seems to have no problem with making very quick decisions and then compelling the entire market to, jump and implement those decisions, which is great from a technologist point of view to see this iteration take place, but it's expensive to continue that sort of pace. But yet learn from what's gone on before, and then, recognize that the UK also needs to invest and to remain current.
Thank you, Ralph. Heddle?
Yeah, I think that's right. First movers need to look at who came next because they tend to iterate and improve. That's what humans do. We learn from each other and to try and improve what we do. I think the single market that I've been most impressed by that's come after Europe has been Singapore. And the thing that made Singapore special, Singapore's always special. It's a wonderful place. But one of the things that made it particularly special is they had a digital identity framework already in place through GovTech, and that enabled new data sets, whether it's open banking, open health, open tax data, to be added together with a single place where consumers can go, which means the commercial benefit and the consumer benefit grows incrementally. It grows exponentially because you get a network effect around those points. It also made the cost of implementation far less onerous on industry, which encouraged firms to get on board and do it well right up front. So if markets were starting fresh, or if you're going through a round of upgrade, I would say look at whether there's an opportunity to embed digital identity now, because that'll make the entire journey going forwards much easier.
Thank you. I mean, that echoes what some of our previous presenters have actually said about having a digital ecosystem, digital identity. It's obviously something that we still struggle with in the EU and the UK, and I'm not sure that we're going to solve for that whilst we're talking about PSD3. But thank you both for your time this morning and for sharing your thoughts and your expertise.